Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Harmony One. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now let's jump straight into the TA. So taking a look at the daily chart, Harmony One against Tether USD, and we have the same Fibonacci retracement on the chart with the swing high printed in January last year and the swing low printed in June 2021. Our 1.618 target is all the way down here at 0.01313. Now, if you don't know how to use the Fibonacci retracement, make sure you check out the video that's linked down below in the description. I explain very well how to use the Fib retracement for short and long-term targets. So assuming you have watched that, let's jump into the chart. And oh, sorry, I got the brush there. So if we zoom in to the daily, you can see that we had quite the move to the upside since our little bottom here in January. And we've moved up 3x since that, and we ran into the 1.272 Fibonacci retracement level. And I was really hoping that we would break the August high because that would be a very bullish indicator, as we would be breaking a major resistance level. Now, as you can see, this high in August is actually the lower level of this large resistance block that we have from 0.04752 cents down to 0.03348 cents. Now, this is a very strong resistance block that we have because this was a major support level beforehand. So as you can see, if I even move it back here towards February of 2021, it was even a resistance back then. So we ran into resistance here in February 2021 twice, and then we broke above in March next month. So then we back tested it as support in June, and then we back tested it as support in May, came back up with that little bull trap there, and then we dropped back down. So people thought this was a quick little dip and we were going to continue from here, but then we just continued. Even, you know, this pullback was massive from May till July till June, and we essentially lost this support block, and then we came back up in August and we retested it as resistance, and this was very tradable. We talked about this way before it happened. I talked about this support block, saying how we could retest it as resistance afterwards, and this was a very good entry for anyone looking to get into Harmony One, basically the 1.414. That was a 63% move, and then we could have bought back in, you know, with a 50% pullback off of this high from this high that we printed in August. So yeah, this was a tradable event. Eventually, we bottomed here in January, and now we're looking to find some support. And if you zoom in, you can see that we're holding the support trend line at 0.02156, which I touched on in the last video. And this was a good buying opportunity. So this was 1, 2, 3, 4, 5, 6, 7. So around about February 22nd, I think, or 23rd is when we had our last update on Harmony One. And that was when we were dropping below the 20 EMA. So from there, you were still able to secure a 12% discount on Harmony One. Now, this level is important because we have multiple retests of this level as resistance. For example, back here in November 2022, in September of 2022, and once again here in January of 2023. And if you take a look at this level here in August last year, we did back test it as support. Once in August again, so 2 times in August, then once as resistance in August, and then we eventually broke down below. So this is a very important level historically speaking, but I do think we are going to be losing it. Now, if you sold here at the 1.272, I would feel safe buying in right now, even though I would probably know that we're going to be pulling back later, but it's all about managing your risk. So you already saw a 20% pullback. That's a pretty fair discount, so you can buy back in if you are looking to buy back in, of course. And just waiting for a 90% pullback from here isn't, very smart, even for a 50% pullback, because at any point here, you could be on your way down, but then the price can just reverse and start moving to the upside very quickly. So you don't want to miss out on that potential move to the upside. That's why I tend to keep my swing trades very short, very quick. 5 to 10 to 20% pullback, I buy back in, and then I'm ready for the next move towards the upside. And I only sell when I'm very overextended on the daily chart from the 20 EMA. And if I take a look at the RSI, you have to be overextended there on the daily as well. That's when I take profits. So I take profits up here and not down here. I don't sell at a loss down here. This is actually where I buy, and that's where I sell. I'm speaking in general. I'm not speaking specifically on Harmony 1 in this case. So as you can see, what's happening on the daily RSI is that we're pulling back down below our support that we were targeting, and we actually came back up to retest it as resistance. Even over here, as you can see, we broke below, back test as resistance, and now we are on our way down. So what I would be doing here is I would be targeting the yellow support block that we have from 36.4 down to 32.8. That's going to be a very good entry, because every time we bounced off of that support block, we saw a move to the upside, except this little fake out over here and this little fake out over here. As you can see, in May last year, you broke down, back test as resistance, another move to the downside. And here in December, we broke down and we went into this purple support block that we're going to touch in a second. So as you can see, this golden support block is very important. So if you dip down here, this is a good dollar cost averaging area. Now the purple support block below is even a better entry point, as every single time we saw a bounce from there, the move was pretty significant. For example, here in May, we saw a pretty strong move into the end of the month. The bounce that we had in July took us all the way into the overbought in August. And then the bounce that we had here in December, and I was talking about this support block. I told you, if we come back down this low, it's going to be a great entry point. And look what happened, in a couple of months. Even less than a couple of months. This was December 31st, and this right here is January 15th, sort of, right? January 20th. So this was a very quick trade that you could have had, and a very profitable at that. So right now we're cooling off, we're waiting for a pullback. So let's see if we can get down into the oversold, which is below the index of 30. If that happens, great. You can buy even more tokens at cheaper prices. But that's pretty much what I have here for the daily chart. Let's switch over to the weekly chart on Binance. Taking a look at the weekly chart on Binance, as you can see, we have a falling wedge pattern that we broke out of, and we were targeting this level here at 0.03113. This was the price where the falling wedge was actually created, or around about 3 cents roughly. But we didn't manage to retrace that high, unfortunately, so the target was not met. However, I always advise you guys to take profits below the actual resistance levels, because that way you're before everyone else. So the price has less of a chance getting up there to 3 cents than it has of getting to, 0.2999 cents. So you have more chances of getting filled here. And this is exactly what happened. Everyone who had their sell orders below 3 cents, because this is a round number, you don't want to have your, sell order at a round number to start with. So people just put their sell orders below here in this area, and they sell, and everyone waiting above here at 3 cents is still left waiting. And the people who sold here are able to buy back with a 20% pullback, which is the idea behind this. So the 20 EMA on the weekly is actually holding us as support right now, which is very good. This is also an indicator that we could start buying in right now, as the 20 EMA is a pretty strong support level. However, I don't think that we're going to be holding above it for a very long time if Bitcoin decides to pull back down to $21,000, because if that happens, we will probably see a move back down to this green support block. And that would still be bullish as long as we hold this low that we printed in January, because we're going to be printing a higher low. And that is what is a very important part of an uptrend. But we didn't print a higher high over here, which is what has me worried. So typically, once you print a high and you come back down, you print a lower high. That shows that the trend is is not as strong as it was over here. The bears are slowly taking over, and potentially the next pullback you're going to get is going to be even lower than the low that we have. But it all depends on Bitcoin, like I said, because Bitcoin leads the market. So if Bitcoin sees a flash crash, altcoins will dump like crazy. And in that case, you have a strong support trend line here that I've had on the charts for many months. And it's at 0.00756, which is exactly this high that we printed back in December of 2019. So maybe if we see a flash crash, I'm not saying it's going to happen. I'm just saying in case it happens, you are prepared. We can come back down all the way here with a large capitulation and an immediate recovery afterwards. So this will be your sort of March 2020 dump that is potentially coming in 2024, maybe at the start of the year, maybe before the halving, maybe after the halving event. No one knows if it's going to happen even, but if it happens, you have your, support level here. You are able to set up these buy limit orders in advance so that even if you're asleep and you have the flash crash, you wake up in the morning and you're already in profit. So that's pretty much everything I have for Harmony One. Taking a look at the weekly RSI, you can see that we're sort of coming back into the support block here, but I do think we're going to be losing it and potentially even breaking below, back testing it as resistance and sort of coming back down here below the RSI of 40. That's what I think is going to be happening. Coming back down below the RSI of 30 would be ideal because we're going to get oversold here, and that's where you want to be investing. But this accumulation phase was also very good for dollar cost averaging. So if you manage to come back down here, that's going to be a great level to buy. So I would say below 40 on the RSI is a great level. And let's take a look at the volume indicator here. You can see that the volume is getting better than it was in 2022, obviously, but the past few weeks haven't been as exciting, obviously, because we're cooling off. The stochastic started to recover into the upside. The settings for the stochastic is 28 and 14, just so we get less false signals. So based on this stochastic right now, this is our bottom, and we're starting to move up here. So we might have a local, high in August, as we usually do, and then we might pull back down once again into fall, and then we can come back up once again in at the end of the year. So we'll see if that plays out. But if we're below the index of 20 on the stochastic, especially on the weekly chart, that's a great buying indicator, just like we had a great time to accumulate below the RSI of 20 or below the stochastic of 20. So that's something that we can be looking forward to. The MACD is doing very good right now. As you can see, since the bullish cross in July, we've been moving towards the upside. Not for the price action necessarily, because since July we saw a move back down into December here. So really we printed our local low in December. So if you traded based on the MACD, solely based on the MACD, you would have been at a loss up until December. So really you want to be combining this with other indicators, but for now the MACD is looking good. As you can see, we're looking bullish. If we start turning for a bearish cross, and once you get that bearish cross on the weekly, that's sort of a looking glass towards the future, because the last time we had that was back in January 2022, and look at the pullback we had since then. So maybe once we start getting the next bearish cross, we see a stronger pullback. So just be ready with some cash in case that happens. And that is pretty much everything for Harmony One. Thank you all for watching. If you want to check out my Patreon for exclusive content, the link is going to be down below in the description. Have a great day, and I'll see you in the next update.